you have to go in personal, won't you?
Yep, I was just about to click onto the time on 6 o'clock. So yeah, I can see everybody's kind of pumping in and kind of jumping on board. We'll just give it another, oh yeah, we're right on 6 o'clock. So I think we'll just get started with it.
We're recording?
We're recording.
Take it away.
Yep. Thanks for joining us, everybody. I'm just going to go through basically, we're doing the end of financial year kind of tax planning session, partnered up with Trademutt. Ed and Dan have come over to the office. So I'll just get straight into it. Basically, just a little bit about myself. I'm the CEO of Tradies Accountant. I've been working in the accounting space for the last 10, 15 years. And basically, yeah, just passionate about building relationships with business owners, small to medium business owners is where I basically spend most of my time. So Tradies Accountant, what do? We help business owners with three main services. So end-to-end bookkeeping services, preparation of financial statements, tax returns, and also provide specific consulting advice to trade businesses in that SME space, help them improve their profitability and increase their cash flow. They're the three services we offer. So I just wanted to go a little bit into, technical challenge. Yeah, I just wanted to go a little bit into the partnership. So obviously, Ed and Dan, we met up with them and through this is a conversation starter, and just thought like what they were trying to do in terms of the mental health aspect in the trade space just really appealed to us. Obviously, you know, doing finances and doing tax, we've noticed that a lot of trade business owners have had really big problems in terms of managing that whole space. And realise that also leads on to mental health issues. So we've thought, you know, what we can do to kind of help in that space is being able to partner up with Ed and Dan and Trademutt and provide some pro bono advice to some people in that space that are having really big challenges. And I just think, yeah, it's a fantastic initiative that the guys are doing. So it's a really good opportunity for us to jump on board and create that partnership. Some of the other affiliates we work with, so Pro Trade United, Master Plumbers in Queensland, the Shop Fitters Association across Australia, Nextvia across Australia, the Conversation Starter, obviously, and also Rostron Carlisle Lawyers. So we do a fair bit of work with them as well. Just a little bit of housekeeping before we get going. I'll probably talk for 20, 25 minutes, maybe 30 minutes. If you go to the bottom of the bar on your Zoom, you'll actually see you can raise your hand, lower your hand. If you have questions, we're going to do the Q&A at the end, but just pop the questions up through the box. Ed's going to tally up all the questions, and if they're important, he's going to ask as they go. Apart from that, just sit back, relax, try and get in the zone. Try not to fall asleep with the accounting and tax kind of talk. And yeah, hopefully if you turn everything off and try and pay attention, and you'll get value out of the session, I'm sure. So that's probably the important parts. So what are the priorities coming into the end of financial year? Like what should you be doing? So the first thing I said is probably important for business owners is, you know, if you feel that it's valuable and you feel like you've got some tax issues there, meet with the accountant. So whoever your accountant is, if you haven't met with them yet, even if you get them on the phone for a 5-minute conversation, that'd be invaluable to do before tax time. And look at your current, you know, tax position and try and work out with your accountant on whether it's going to make sense to try and reduce that tax position and you know what you can do about it. I've also, superannuation is obviously a massive priority. Due to COVID, there's been some changes there that I'll kind of cover a bit later on. But yeah, having a look at that. And business forecasting for the next financial year. So anyone that's running an SME business should be starting to think about how does the next year look? How does cash flow look? How does profitability look? Starting to put that stuff in. So they're probably the important things to think about for end of year. Yeah, so I've got a case study here. This is a client we worked with, and you know, through doing tax planning, you know, we said, what's the most important thing in terms of doing your tax planning? Is it to pay less tax now, or is it to have more cash flow? It sounds complex, but that's sometimes a trade-off between paying less tax is, you know, you don't have as much cash flow because you've had to spend it on deductions that you've claimed. So it can be a little bit of a trade-off in that respect. With this client that we did the work with, we created a structure that was actually commercially viable and gave them access to lower tax rates. So through that meeting, just through the structuring, we actually enabled them to save over $50,000 in 1 year. So how we did that was they were structured incorrectly, and it was in a trust as a trading entity, and all of the profit was going down to beneficiaries. So they ended up with a really high tax rate. And through being able to do a bit of tax planning and kind of find out what was important and how it's going to work best, we're able to make a massive saving. I've got someone that's got their hands up there. Pat Mansfield. Mate, if you've got a question, we'll chuck it in the questions box and maybe come back to it. Yeah.
Chat to him.
Yeah, I'll get Ed to get onto that. Yeah, so that's just a case study of one of the clients we worked with.
Oh, just wanted to know what their turnover was.
That client there was probably up at about the $3 million mark with turnover. But I kind of see that the tipping point can be over $1 million turnover, just depending on how profitable the business is. All businesses are different, but that specific client there was starting to turn over a fair bit. And it's generally with these things, you want to look at them early before you get to 3 million, because it'll cost you a lot less to do the change. Once you get there, it's very hard to change. So yeah, but what I was going on to now is the instant asset write-off. So obviously a lot of people have heard about this because they put the asset write-off up to $150,000 for an asset that you could claim. So the criteria, I mean, generally with a trade business owner, the biggest asset they probably buy vehicles. Have some clients with tractors and other kind of equipment like that, or maybe excavators for plumbers. But the biggest asset's generally the vehicle. So some of the important things I said on there is they've got to make sure that the vehicle meets the criteria. Like that's the most important thing. So there is criteria behind it. I've put a link to a blog we did that actually explains the criteria in more detail. But some of the other things that are important is that buying the vehicle is one thing, but a lot of the time you get a loan for the vehicle and you've got to pay the loan over 5 years. And that's why I said at the start, you've got to remember, if you're going to get a tax deduction now, can you meet that commitment for the next 5 years? If you're buying a Silverado and it's costing you $1,500 a month, is it really important to get the tax deduction now, or you're going to be lumped with $1,500 a month for the next 5 years? That's a big commitment that you're going to make. So that's why a lot of people kind of look at the tax aspect of it, but look at the actual planning of it. And maybe that's where you need to speak with your accountant or your advisor and really have a look at that, put that into your forecast and see if you can afford the $1,500, and then kind of make the decision on, do I need a Silverado or can I get a BT50 or a Toyota Hilux? So I think one client said to me, you know, it was a bit of a wank factor, but they wanted the Silverado. So, you know, personal decision there. But also make sure you have a logbook, keep the logbook in place, track how much you're using for business, how much you're using for personal. Because if you get audited by the ATO down the track and you haven't done things correctly, yet again, it's going to probably cost you money. So I was looking at some other tax deductions. Obviously for trade business owners, massive tax deductions tools, you know, replacement tools. So now is probably the best time for you to go through and have a look at your tools. If you need updating on tools, like there's no point using an old tool if it's not going to do the job, and now's the best time obviously to purchase that tool. But yet again, look at, you know, what they're going to cost and whether it's worth getting. If you're just an individual employee, you've got to work out, are you going to actually use that tool for work, or does the employer already provide it? Because you can't go and buy a bunch of tools, put them in your garage and use them for your personal use and claim them on your business expense, because it's not a business expense. Protective equipment, I know this is a good chance for the boys, because if you've got high-vis stuff or you've got to get new outfits for the team, now's the time to kind of go through and get that stuff in place. Generally going to be tax deductible. Professional development, if you need courses, stuff like that, if you pay those courses pre-June, in most occasions you should be able to claim them. And obviously superannuation contributions. So as long as that you get that done in the correct time, you'll be able to claim it. I know Ed's been waiting to scream at me on what an actual tax deduction is.
What is a tax deduction?
Yep. So some clients kind of say, if I claim my 10 grand tool, does that mean I get 10 grand back on tax? That's definitely not the case. So first of all, to get a tax deduction, you need to be making a taxable profit. So you need to look at your profit and loss and say, am I making a taxable profit? If you're making $100,000 profit and you get a $10,000 tool, that will bring your profit down to 90,000. So you're only saving the tax effect on the $10,000, which generally is probably, you know, 2,750. Once again, this isn't specific advice. This is all general advice, and it's kind of like you have to speak to advisors to check numbers, make sure it's deductible and all that kind of stuff. But I hope, Ed, that kind of answered the question to some degree. What else have we got? Important reminders. So like the first thing I said is always take into consideration private use and business use. So the ATO normally kind of come out and say, if you can't determine how much is business and how much is private, you probably can't claim it. So for example, if you're using your phone, you'd have to have some way that you record, well, how much am I using for work? How much am I using for personal use? And you can only claim the work percentage. The methodology is the same across every single type of expense. It's just a matter of being able to determine what's for business and what's for personal. Once you've determined that, you can claim the business use expenses. Second to that is you need to keep the tax invoice. So that one's really crucial. If you get to the end, you've done your tax returns, whether you're a business owner or an employee, if you haven't kept the receipt and you get audited by the ATO, they're going to disallow the deduction. Like that's just a general rule of thumb. Now, I know James asked me before about Receipt Bank, also Xero, you know, whether they use QuickBooks, Maya, but it doesn't really matter what software you use. They all offer some type of electronic or cloud storage kind of device. If you're just using an Excel spreadsheet, you can just put it in your email or an account's email. As long as you've got the actual copy of the tax invoice and you meet the business usage, you'll be able to kind of claim the expense. If you're making a big purchase, like you're getting a Silverado, like we're talking about just before, make sure you keep the invoice, the loan details, all of the documentation. It's really crucial. If you're a tradie and you're a bit disorganized and you're leaving everything everywhere, and then a flood comes or something like that, and you lose all your documentation, it's going to be on you on whether you get audited and you're going to be able to, you know, meet the satisfaction of what the ATO are going to ask you. So you can't kind of claim ignorance and you can't kind of claim stupidity because they're not going to, you know, run with either of those two kind of excuses when you get to the end. Budgeting and forecasting. So this is more so for business owners, but now is the time you really want to be looking at the next year. I've got a lot of clients that ask me, how do I prepare a cash flow forecast? How do I forecast out? And I've seen lots of solutions over my time on all of these ways you can do it. Now, if you don't have an internal accounting team and you don't have much accounting nous, I would advise to start off as simple as you possibly can. So, you know, whether that's just getting an Excel spreadsheet and putting revenue on one line, cost of sales on another, and overhead expenses on another, and just saying, you know, what does my revenue look like for the next 3 months? If you're getting JobKeeper, now's a crucial time. If you're more advanced and you kind of got to the next step, now's a crucial time to put JobKeeper in there and say, how will I look in October when JobKeeper stops? Because that's a big thing that's coming up. But, you know, generally in accounting terms, if you're not planning and you're not putting your income and expenses are and starting to forecast that out, then you're kind of letting life dictate where the business is going to go, as opposed to you having a bit of a strategy and a bit of a plan with it. I have a question that just came in, Ed, about the ABN. We'll get back to that question at the end. I think Ed will be able to see it. So yeah, I mean, the main thing that I've got is forecast out. Do some work. Now, if I'm a big believer on go and see your accountant and get the accountant to sit in on the forecasting and pay for the advice. A lot of people are always scared of, oh, it's going to cost me $1,000 or whatever the cost may be. But getting the independent advice means that you're going to be able to do this properly and kind of get some proper nous about it. It's a good chance to also review your overhead expenses. Have a look, are you running too fat, or are there investments you should be making? Review your cash flow position. So, you know, if you're getting JobKeeper and you're sitting on a bit of a cash reserve, are you going to be okay in October, November, December when the rubber's going to meet the road? Because that's the part that everybody's kind of talking about at the moment. And plan out your workflow and capacity for the financial year to come. So, you know, if you've got 5 guys on the team, that's your capacity. If you've got 3 builders, but you're going to need 7 guys on the team, now's the time you need to start looking at that cash flow, saying, can I afford to put these extra couple of guys on the team? Have I put that in, and will that work out? Once again, I think business is about steering the ship the way you want it to go, as opposed to letting it float around rudderless without a plan. So this is just a basic cash flow projection. I mean, this is as simple as it gets. Like literally, you know, you've got cash on hand of 10 grand, you know, and then we got, you know, 10 grand coming in, 2 grand coming in. We're going to lose some money in July and August because it'll be tough. September and October look good. November doesn't look good. And in this strategy here, obviously February looks absolutely terrible when the BAS is going out. So, I mean, if you're not doing this type of planning, really in this business, probably around September, October, you're looking for a loan maybe to get through February, or maybe you've got to, you know, put some of the guys off, or you've got to slow the hours down. But it's, if you don't have this type of plan and you haven't been able to see it, you're going to get to February and you're going to go, oh, everything's hit now and I've got no plan. And that's why it's important to have these kind of graphic. This is obviously very simple, a simple version of it, but you could do this as simple or as advanced as you want. So if you know, your revenue's low, it's putting something in and doing it. If you're in a bigger kind of business and it's more advanced, that's okay. There's like other solutions where the next one that I show, you know, you're entering cash going in the bank, you know, you might be turning over 70, 80K a month. You put your cash paid out, you know, advertising, your contractors, your materials, you put your wages in there. And then below that, start to put in what you're paying for that Silverado and your other loans. And also put in there your capital purchases, and put in there your BAS. Like, it's so important that you put your BAS and super on what you're actually paying for these liabilities. So this example I've got here is actually an intermediate example. You can go to the level above this, which is the advanced example, where you start to do sensitivity analysis and start to kind of, you know, if I get 80% of my debtors next month, how does that look? Or if I only get 60, how does that look? So you can go as kind of easy or as medium or as advanced as you want. But my advice is to anyone that's owning a business is do something. You know, the worst thing you could do is do nothing, because if you don't have any of this stuff in place, as I said before, life's just going to dictate what happens. So that's probably the important part with this. And here I've got, everyone I think will get a copy of these slideshow. We'll send it out later, Ed. But there's this website. We've done a bit of work with these guys. You can actually go on there, and they've got the spreadsheets already done for you. You can download the free one. The one that I said is a simple kind of one. You can download that for free off the website. You just go on there and get it. And so if you can't afford to get an account to look at it, just do it yourself. You know, it might cost, you know, it might take you 3 hours to do, but you can do it yourself. There's a medium one on there that I think you pay for. It's only about £300-400 one off, because these guys are from the UK. But there's an advanced one on there that might set you back, you know, £1,000, and it actually links to Xero. So you can sync it to Xero and it pulls your data down and you can do all of your analysis in there. For that kind of spreadsheet, you'd probably want to have an accountant. You know, you probably wouldn't want to jump into an advanced thing like that, because for a lot of business owners, if you don't have accounting qualifications, it's going to be very hard to understand, you know, how to get the most out of that. But it gives an option for all types of business owners there. Just jump on the site, have a look at it. These guys are brilliant to work with. They'll actually build a spreadsheet for you if you need it built. Like they're gurus. We did a webinar with these guys last month. So if you jump on our Tradies account, you can actually see the webinar I did with these guys. So yeah, business planning. So what are some other stuff that's going to be important for the business? Estimate your tax position. And if you've got a big tax payable, if you've got 100K tax payable, start saving for that now, because it's going to be payable May next year. So start putting 10, 12 grand and put that into the cash flow we just did, so that you know you don't get to May saying we've got nothing in the bank now, how are we going to pay this tax bill? Whether it's 100 grand, 10 grand or 500 grand, doesn't matter what it is, it's about that saving element of it. Look at the COVID incentives. Like, I know there's grants in Queensland, grants in Victoria. They just re-announced that 10 grand grant. There are plenty of incentives on. You've got JobKeeper we'll go to. You've got the pay-as-you-go boost. There's a whole bunch of incentives at the moment. So, I mean, it's worthwhile having a look into these. They're not they're not all going to be relevant to your business, but it's worthwhile spending the time having a look at them. And create a plan for the next financial year and how you want it to happen. Project out your income and expenses and do that planning. It's just crucial. I can't reiterate how important it is to get that done. So the COVID-19, I'm sure everyone's heard a lot about these incentives. Might be questions about them. Cash flow boost. Everybody's getting a minimum of 20K if they've been paying wages that are going to come through the ATO account. There's a few criteria around that on our website. We've got some links that will go in detail with this stuff a bit more. And the JobKeeper payments. So you have to have had your revenue drop by 30%. And if you have, you're able to claim this $1,500 a fortnight kind of reimbursement for paying the wages to keep people in the job. I mean, my experience is not a lot of trade business owners have kind of been eligible for it because they've all been doing, quite well. But if you are having now in June and things have kind of tapered off, definitely eligible. Have a look, speak to your advisor, make sure that you meet the criteria, and then definitely put the applications in. Also, the apprentices and trainee wage subsidy. Obviously, there's some timing and dates around this, so look on the website, our website, or look on the Queensland Gov ones if you need more. But yeah, you're able to make those claims for the apprentices, which is like really good for the industry to keep these apprentices and trainees in the job. Crucial. Also loans. So a lot of clients, we had in Queensland, the QRRDA loan. The governments have backed the bank loans. So we had a fair few clients get, loans from CBA and stuff like that. A lot of the time when you go to the bank, they're going to ask you for some of the stuff I've already been talking about. So they want to see your projections. They want to see your cash flow. They want to, and that's when we get a lot of business owners come to us and go, hey, can you do these? But it's kind of like, if you're already doing those, it wouldn't be much of a problem. You just automatically take that to the bank. But obviously the banks have been definitely helping through the whole crisis as much as possible by deferring loan payments, fees, waivers on stuff. So definitely look at what's eligible for your business. Early access to super. This is the one I've been talking about to a lot of clients. I'm not a financial advisor, so nothing I'm saying is financial advice. But the government, if you meet a certain bunch of criteria, they're enabling you to access your super. My personal opinion, just my personal opinion, is don't touch your super unless you absolutely bloody have to. Like, I understand if you're going to lose your house and you need to make a mortgage repayment, I would personally probably take my money out of super. But some of the data suggested people are taking it out to put on the dogs and horses. I think that's crazy. Personally, everyone's going to get to 60, 65, have to retire. And that $10,000, by the time you're 60, 65, if that was in the market, it's probably going to be worth 100 grand. So taking it out now to put it on the dogs and horses, to me, is insane. So I just can't reiterate enough. What my first point of call would be, if I needed to access super, go to a financial planner, speak to them, go to your bank manager, or go, I think accountants have a certain amount of leeway now on how they can give you advice on it, but go to who your advisors are and see what your other options are before you take your money out of super. I put some criteria there and what you need to match. You need to be unemployed, or you need to be on the job seeker payment. So the ATO have just announced that they're going to go and look at everybody that's applied for it now, and people that didn't meet the criteria are going to get fines. So, I've seen some of the statistics on how many people have claimed it, and I've been mortified as the accountant. So luckily we haven't had too many clients that have actually kind of applied for that kind of stuff. So here's some useful links, like jump on this Queensland website one, and you can put your stuff in there and it'll actually tell you how many grants are available to you and what you can claim. So it's an awesome one where it does its own search for you. So jump on. We'll send the slides, as we've said, later on, so everyone can kind of have access to them. And then we did a blog on our website that also has a link to this. So if you want to go through our website, you can also find it on there. And yeah, that one's really cool because it will just give you a whole list of everything in one go. So you don't have to search around, spending hours or asking people like what they can kind of claim. Yeah, so I've kind of, punched through most of that in about 25 minutes. That was probably the crucial kind of stuff, but then we're going to do a bit of a Q&A with the guys, because then we could make it a bit more interactive rather than just me talking.
Yeah, 100%. Well, we've got one here from David. Said, afternoon, Bryn. I've been advised to put 20% of all money received for work that I've carried out for either GST or PAYG, etc., into a separate account
Yeah.
for my ATO payments when required. What are your thoughts?
Yeah. Look, I can't provide specific advice on that, but what I can say is one of the things I've been advising a lot of our clients is having a separate bank account. And I know a lot of people read Barefoot Investor. There's another one, Profit First, from Mike Lukowski, where he talks about putting 10% of your profit away. And what I kind of say is a good theory is having a separate bank account. You put your PAYG in there, you put your super in there, and then you allow a little bit extra for your profit. And when you have your invoices come through, automatically put that amount down there. So I think the client then said, Dave said 20%.
20%, yep.
But try and work that percentage out with your accountant, whether it's 20, 30, whatever the case may be. And then I think the methodology is exactly right. Put it away to an account. And even like if you have challenges with your finances, put it into an ING account that you can't access, or not ING, whatever it is. Put it in there, and don't have an internet banking, so you can't transfer it back. It's not going to make it impossible. You can always go to the bank, but if anyone's been in life, it puts a barrier in front of you and the money, so it's harder for you to do it.
Yeah, awesome.
So
there's another one here from Ash. She's saying, I'm considering registering for an ABN for my woodworking side gig. I've heard some people say you have to have an annual turnover of 20,000 before you can claim back for tools, etc. Is that correct?
Yeah, I think there are some situations there where there's loss provisions. So when you set up a business, you have to meet 4 tests. So it gets quite complex in that specific scenario. But I think that 20 grand could be correct to some degree because you're not able to claim unless you satisfy the business conditions. I can't answer the specific question yet again. I'd have to have a look into everything. But there may be some truth to the fact that you're not able to write it off as that sole trader.
Yeah.
Got one here from Steve. Steve wants to know if you think that having an accountant on your books should be treated like another employee of the company because they're that essential.
Oh, 100%. And not just an accountant, like your advisors. Yeah, I think, really you should have a team, and your team is your internal team, but then you have an external team, and the external team can be your accountants, it can be your advisors, or it can be your mentors, it can be a whole range of people, and you should see them as part of your overall team because, these guys, as long as you've got good advisors on your team, they're obviously helping you progress the business and grow the business and make the right decisions. And personally, myself, I've had coaches, I've got a mentor, and they all form part of my team. So I've always practiced that personally as well.
Fantastic. I've got a question here from Jim, and this sort of pertains to Ed's question about what is a tax deduction. But if I buy $1,000 worth of tools, how much do I get back at tax time?
Yeah, that's a perfect one. So that's the question Ed had. That's the question Ed's been asking. So as long as you're using those tools for work purposes, right? So if you're buying $1,000 worth of tools and you put them in your garage and you use them on the weekend to fix your car, that's probably not going to be tax deductible. But if you had to buy those tools and you legitimately need them every day for work purposes, then you can claim them against your taxable income. So depending on how high your taxable income is, you'll get back just the tax element of that $1,000. So in a simple example, you could get back $300 on your tax return.
Awesome. I got one here.
Go on.
Tommy Barker. Yeah, Tommy Barker said, what about FIFO workers? If you work for a company that supplies pretty much everything, flights, uniforms, food, accommodation, etc., what are we able to claim, if anything?
Yeah, generally, I used to do a lot of individual tax returns, and I don't do as many now, obviously, because we only work with SMEs. But with FIFO workers, generally when we used to do them, they didn't really have anything to claim because the problem is work pays for absolutely everything. They fly them up, they put them in dongers, they provide them with food, they kind of provide just about everything. So generally, maybe they're in a union of some degree. Even then, a lot of miners aren't really in unions. So I'd probably say you're probably not going to have many claims in that scenario there, unfortunately.
So would it be financially beneficial to not look for them? If they're not there, it's going to cost you more to get them anyway?
Mate, that's my advice. Money in your bank's better than saving $300. I'd rather have the full $700 than save $300. Do you know what I mean?
Yeah.
So there's a lot of, and this couldn't border on financial advice, but my personal opinion is don't search for tax deductions. If you're on a good wicket and you're making good money, save the money you're making, maybe put it away, and then look at investments. I mean, you know, if you're trying to get too many deductions, sometimes you can shoot yourself in the foot. And money's not always there. Like I've done clients where they've been on a great wicket making 280k a year or something in the mines, and then the next year they're on 80, 100, you know?
Yeah.
So while you're making the good money, try and save it, because it might be a rainy day down the track.
Do you find that's a common misconception that a lot of tradies and trade business owners feel like just because they can get the deduction that they need to spend that money?
Oh, I think so. I think you get to May and June and you kind of start to think, how am I going to save money on tax? And I'll go all out to just save as much money as I can. I think more mature business owners generally tend to kind of realise, because they've done it a fair few times, and they kind of make a calculated strategic decision on what they're going to claim. I think a lot of business owners that are new in business kind of say, I just want to pay no tax. And like a lot of accountants, a lot of good accountants out there will kind of go, it's a good thing if you're paying 100 grand in tax, because you probably just made a pretty good profit. You know, like you probably just made a pretty good profit, and you should have cash in the bank in that scenario. So
Yeah, awesome.
For tradies like myself, who the only numbers they understand are on a Stanley Fatmax tape measure,
yep.
what is the first thing that they should do to try to get some help with getting numbers in place? Because it can be a real, you know, head
Stressful.
Yeah.
My advice would be seek out an accountant. Like, you know, that's probably, and learn to value the advice. So pay to have good advisors, like I said before. And if you can't seek out an accountant, look for a mentor in business. Like I'm sure if, I'm not sure, Dan, in your certain situation, who I can say, but if there's a mentor, like somebody you know that's run a business and he's running an electrical contracting business and he's doing real well, go up to him and ask, hey mate, how did you go about this? What did you do when you first set up? How did you do? Because what you'll find is most people have been through all of this before.
And they want to tell you.
And they want to tell you. Like they'll sit there and they'll want to tell you exactly what they did and the challenges they had. And it's a lot better to learn from someone's mistakes than it is to make them yourself.
Love it. There's one here from David. He said, so if you buy tools and make a loss, does it add to the loss that carries across to the next financial year?
Yeah, I'm just trying to think in what scenario that is. Is this David who's asking about the business loss at 20 grand, or this is
no, different guy.
Different guy,
David Lovick. Yeah, different guy.
Yeah, okay. I mean, losses can carry over. So there's I can't answer specific questions, but there are provisions where if you make a loss one year, that will carry to next year.
Okay.
And then you can take that loss off your taxable income from next year. So I kind of hope that answers to some degree, but there are some pretty specific rules around that you need to get advice on.
Yeah, nice. I've got another one here. It says, "G'day, legends. Money is an obvious factor in the mental health across trades.
Yeah.
What's your number one non-specific piece of advice for all tradies? Is it to separate income into 4 different bank accounts, have the correct business structure, trust company, etc.? Any other ideas? Like, what's the top tip?"
Yeah, there's so many, and I look back at all the clients that I've seen getting problems. I think a few tips I'd give is live within your means. So just because tradie up the road's driving the brand new Silverado and is living in the top house or whatever like that, don't try and overspend. So a lot of businesses that I see fail, they've done it because they're spending too much personally. So a lot of people are talking about bank accounts and where to put your money. But if all the money's coming out because you're spending it on brand new cars, brand new houses, going out, doing things you can't afford, drinking and everything else like that, then you're never going to be able to save it no matter how you separate your bank accounts. So I think you've got to be realistic to what your current financial position is. And sometimes that takes, and I heard a business owner and Grit the other day talking about sacrifices they had to make. 100%. Like sometimes you've got to make sacrifices. The business isn't there yet and your salary can only be 60 grand a year. Make the sacrifice, take 60 grand a year, live within 60 grand a year. And when the business is turning over 3 million, making a big profit, then you can afford to put the salary up to 120. That's probably one of the biggest downfalls I see. Another one is, contractors stepping into a game they don't know. So, or builders stepping into a game they don't know. Like if you're good at doing one thing, and I'm trying to think of an example, like if you're good at doing charge work for residential mum and dad, do that. If you get a big contract, a commercial job contract with one of these big jobs in the city and it's 300,000 and you think you've hit the big time, that can be when you end up going broke because you don't know how to do that work. So that's what we've followed here, obviously with tradies accounting, is we've specialised in one space. And I think with trade business owners, you want to be careful about going outside the zone that you know.
Yeah.
They're probably two big pieces of advice.
That's good. Hope that was good, Matty boys. The other one is we have a dedicated home office. Improvements to that office, example, air conditioning, 100% claimable as an instant tax write-off.
Oh, wow. Yeah, that's way too specific. I can't answer that question at all. And in fact, I'm not even 100% sure. We'd have to look at it. I'll get one of the accountants to look at that kind of thing. What I can say is the ATO have come out with new provisions for home office. So if you go on and have a look, they've actually made a new rate that you can claim on the home office. You've got to distinguish whether the home office expense is an occupancy expense or it's a running expense. So that's the first test you want to go to. And the occupancy expense is the one where you kind of can capitalise certain items. So it gets quite complex. If you want to do the running expense, then there's a new amount that the ATO are allowing you to claim for a certain period. But in regards to that question, I would put you onto our tax manager and they would answer it.
All right,
specifically.
Ken, that's one. I've got one more. Michael has said, I'm required to travel away from home for work quite often and am given an allowance for accommodation and meals, etc. Can I claim back deductions for accommodations and meal expenses?
Are they being provided an allowance?
Double dip.
Yeah, I think that sounds like a double dip. Normally, if it sounds too good to be true, one of my mentors always said to me, "Brent, if it sounds too good to be true, it is." You know, so that's the advice I'd say. You'd be working on a fine line there, trying to do the old double dip.
Yeah, don't do that, Michael.
Bryn, from my own experience, when I was a second-year tradie, I was working as a sole trader.
Yeah.
Had a workplace injury. I had income protection. I ended up, not a workplace injury, just an outside work injury. Ended up having a knee reconstruction, claimed income protection.
Yeah.
Didn't pay any tax on the income protection.
Yep.
Got hit by the ATO. They went through me for 30 grand.
Yeah.
What is the deal with sole traders, tradies operating as a sole trader, and what provisions, insurances, things do they need to have in place?
Oh, great question. Like, first of all, I would say on the insurance aspect, you nailed it because you had income protection. So if you're a sole trader or any business owner, I would definitely be getting an insurance broker to say, you know, TPD, life, income protection, like look at all of the insurances in place, because in that scenario, if you didn't have insurance, you would have been in the worst position. I know you got hit with the tax at the end of it, but definitely
more than that.
Yeah, like that. Look at all your insurances and weigh up what you can afford and what you're going to be able to claim. So looking at those to start with, 100% advise, and then getting an accountant to look at your structure. If you're a sole trader, is it better to claim through a company structure, or is it better just to trade through your personal ABN? So seeing the accountant, and then generally the accountant's going to also probably refer you to an insurance broker to talk about those things. But there's some of the things I'd definitely be recommending. In your scenario there, you probably needed a little bit of tax advice when you were getting the income protection. So the accountant could have said, hey, they're not withholding tax on that. So you got to put away 31% of that money that's coming in.
Got one here from David. He said, how much and what rules revolve around entertainment, i.e. paying for dinners and nights out?
Oh, yeah, okay. This is a big one that I'm going to go back to the tax accountants with, and I'm not going to answer on the spot. When we get to December, we generally put out some blogs on entertainment expenses, and there's probably some on our website at the moment. But there are some pretty specific ones there, and whether you can claim alcohol. You've got to look at, firstly, is it tax deductible? But then secondly, is there FBT on the expense? So if I go out and get a corporate box and take all the employees out, do I have to pay, is it income tax deductible first? And then secondly, do I have to pay fringe benefit tax on that because I'm providing a benefit for the employees? So what I'd say there, and I'm sorry that I'm not going to answer specific, but is there's lots of resources. Look on the website and have a look at some of the blogs we've done previously. Or when you get to that December period, come and talk to the accountant and just get some clarity around it before you do it.
So from a lot of the questions that we've had through from your responses, it's clear that you can only give general advice, and everyone's situations are so unique.
Yeah.
So how important is it then to probably not listen to what other people around you tell you and actually go and seek out your own advice specific to your situation?
100%, Dan. And that's the biggest issue we have is clients come to us and go, oh, the bloke at the pub said I could take my super out and it was a good idea. Or, the bloke at the pub said I could go and get a bunch of alcohol and go drinking and tax deductible. Like, realistically, you've got to be looking at your advisors and getting that kind of advice to make sure you're doing things correctly. And even when you're running larger businesses, like the amount of business owners that kind of, try and get advice off friends or what other people have done. Sometimes there's a time and place for it. Like I said at the start, there's a place for having a mentor and asking them, but there's also a place for having a specialized advisor that can let you know exactly if that is claimable or not claimable.
Yeah, right.
Question from Warren. He said, what are the benefits of putting additional payments into super?
Yeah, I mean, I'm a big one for putting money into super, and it's a really hard one with trade business owners. But the biggest benefits is one, generally super is going to be tax deductible in most situations. So the contributions should be tax deductible. So it reduces your taxable income. But secondly, if anyone's ever seen compounding interest, Albert Einstein said it was one of the biggest things that he'd ever seen was compounding interest. I can't remember the exact quote. But if you put an extra $100 a week, let's say, the amount that will grow to by the time you're 60 is amazing, and so if you're doing that, you're learning the discipline of saving. And you're going to be the 60-year-old that's going on as many holidays as you want, doing the cruises and doing whatever you want, as opposed to the bloke that's got 200 grand in super hoping it's enough for him to last,
So it's like a short-term pain for a long-term gain.
Exactly, yeah. And I'm huge on it. Like, while you're making the money, Michael Mikowski, or Profit First, big on, hey, put the profit away now, like just getting the discipline of putting 10% away. And then that discipline grows with time, and you learn that you can still live with as much money as you have in the bank after you put that 10% away. And so it kind of ties into the living within your means.
Sorry, just getting a call in the middle of it. Mate, you mentioned a few times in this webinar how important it is to have a plan in place.
Yeah.
But plans can change, right?
Yeah.
So how do we go about putting a plan in place for our finances, for our trade businesses, and then letting them play out?
Mate, plans, every single budget or forecast we've ever done changes dramatically all the time. And that's part of the planning process. You put the plan in place, and then every month you review the plan. And what actually happens is you look back and you go, oh yeah, I spent more in expenses than I budgeted. Why? You're starting to now ask the questions. You're starting to now actually get good at planning. So if you didn't have a plan in place at all, life was just guiding you by and wherever it was going. Where if you get the plan and you start to review the plan, and then you start to ask why did that happen? And then, how do I fix that? And this is when, independent advisors coming in. And I think it gets you in that thought process of being a real business owner, as opposed to just I think Ed and I were talking about before, just a bloke on the tools.
Yeah.
That's good with the tools, but didn't know how to run the business.
Yeah.
And there's plenty of people in this space. I mean, we at the start, I said some of the companies we work with, if you're a plumber, master plumbers, like imagine how many people there are there you can talk to, mentors or whatever else that have been through it before. Pro trade, or, Ross Troncarlo lawyers. You've got lawyers and advisors, people that can help with all these kinds of things.
Yeah, 100%. One here, what advice would you give to young apprentices that are needing tools in their toolkit? Is it save up and buy new, or I'm not too sure. Yeah, or save for their future.
I'm not 100% sure what they're asking there. I mean, I think with apprentices, obviously, investing in your professional development is probably the most important thing. If I was an apprentice, if I thought back and I was an apprentice in the trade space, I'd be trying to get a mentor as soon as possible and trying to really kind of have someone guide me through that trade. That's probably the crucial part when you're an apprentice. And also, the big thing I'd say is you don't need to be a business owner. Ed and I discussed it before, and it's like, a lot of the time, if you're good at your trade and you can make 120, 150 grand a year, you're in a good space. Like, a lot of people think if I go and start a business, I'm going to create this big thing and make all this money. Reality is a lot of business owners go through a lot of pain or a lot of sacrifices to get to the stage where you think they're successful. So it's not always as glamorous as it seems, starting your own business.
Yeah.
And I think most business owners out there will be listening would put their hands up and honestly say it's not an easy road. So there's nothing wrong with being really good at your trade and working on the tools, and you can earn a really good living doing that.
But for tradies, trade business owners, or anyone in general who comes to you for support and advice,
Yeah.
do you notice that when they come to you initially, they might not know a lot, but then through the time they work with you, they then start to become an expert in their own field?
100%, yeah. So I've worked with some clients that have started off doing kind of 500,000 and now running national. We've got one client running a national company that'll be getting up to kind of 50 million turnover. We've worked with all people in between, people doing 500K up to $1 million. And, the revenue doesn't matter as much. A big thing I'm on is the profit and the cash flow. But I've definitely watched people learn, get the advice, implement some of the stuff we say, and then they really grow, as business owners and really get that confidence about them. I think there's coachable people, and there's people that want to grow and people that want to do these kind of things. And then there's people that kind of don't want to grow and are kind of stuck in their ways, and that's the way it is. So, but yeah, definitely, I've always thought that people that invest always get the results,
Last one here. It's not a question, it's just a statement. Ash is saying a company she used to work for cancelled Christmas parties due to the FBT component.
Yeah. All right.
You don't want to work there, Ash.
Yeah, it's not a great place to work. I mean, yeah, FBT is so onerous on companies these days, and it's just tighter and tighter and tighter and everything. But my advice on a personal perspective is, if you're in a company, you want to do Christmas party, or we're having an end of financial year party next week. You want to go and have some drinks with the guys and or whatever you do, have a meal and do that, because it's good for culture. It's good for the team. I mean, we all want to feel part of something, not just we're going to work to be, workers. We all want to feel part of something bigger. That'd be my advice on a
Ash
bigger
says
level.
she doesn't work there anymore.
Yeah, that's why I see. So you want to keep your employees as well.
Awesome. Any other questions?
Last one. When is the best time for an apprentice or a tradie or a trade business owner to engage the services of an accountant like yourself?
Yeah. I mean, we deal with all sorts of clients. I mean, generally, clients will come to us sometimes when they need to set a company up and they're just starting in the business journey. And that can be, anywhere from doing kind of that 200-300 turnover kind of range. Up to running big businesses. The right time is probably when you decide, okay, I'm going to run a business and this is what I'm going to do. If you're still on the tools, just working for one person, you're probably still debating in your head on whether this is right for you. And once you've made that decision, that's when you probably want to invest in a specialist accountant or any account. I mean, it doesn't need to be a trades accountant. It can be any accountant, but whatever you do, get advice would be the biggest thing I say.
Nailed it. Awesome. I might just jump in there and
Go on.
thank everyone.
Swing around there. Jump in the seat there.
Yeah,
Heavy on it.
No, it's all right.
Just
G'day guys, coming through loud and clear.
yeah.
Hope that was there it is there. Was it some benefit? This is something we're going to be doing, every month. It was great. Thanks for all the questions. We're going to be flicking out an email to everyone with Bryn's contact info, a link to this presentation again, and all his other content on his website. So let anyone know that you think might need this information, because we'll pump this out on YouTube tomorrow. Dan will upload it, and we'll be laughing. Oh yeah, and let us know what else you want to hear. So anyone else or any other things, mentors, professionals that you want to hear from, let us know, because this is something we want to be doing at least once a month heading into the future. So hope you got a lot of benefit out of it. Bryn, thanks so much for your time.
Yeah, thanks, man.
And
That's awesome.
have a good night, guys. Champions.